The price of gold keeps going up. Year after year, cycle after cycle, it continues to rise. And the question most people are asking right now is very simple. Why does the price of gold keep going up? And more importantly, is it already too late to invest? Because every time gold hits a new high, people say the same thing. I missed it. I should have bought earlier. Now it's too expensive. In today's video, I'm going to answer those two questions in depth, not with hype, not with fear, but with facts, history, and logic. By the end of this video, you'll understand why gold is rising, what forces are pushing it higher, and why, even at today's prices, gold may still be undervalued. Inflation, the foundation. Let's start with the most obvious reason: inflation. Gold is often called an inflation hedge, and that's not a marketing slogan. It's a historical fact. Inflation simply means that the purchasing power of money declines over time. Your dollar buys less food, less energy, less housing, less everything. Now ask yourself a basic question. What are central banks doing right now? The Federal Reserve, the European Central Bank, the Bank of Japan, the People's Bank of China. They are all creating money. In the United States alone, the Federal Reserve has been printing tens of billions of dollars every single month, and they're not slowing down, they're accelerating. When you create more money without creating more goods, prices go up. That's not opinion, that's economics. Food prices rise, energy prices rise, housing prices rise, stock prices rise, and yes, gold rises too. Because when there are more dollars chasing the same amount of goods, each dollar becomes worth less. Gold isn't rising because it's becoming more valuable. Gold is rising because paper money is losing value. Negative real interest rates. Now here's where things get even more important. Let's talk about interest rates. Most people think that as long as they're earning interest on their money, they're safe. But that's not true. What matters is real interest rates, not nominal rates. If inflation is running at 6%, 7%, or 8%, and your savings account pays you 3%, you are losing money every year. You're being taxed by inflation. Even government bonds don't protect you. Treasuries might pay 4% or 5%, but after inflation and taxes, your real return is negative. That's what we call negative real interest rates. And historically, gold performs extremely well during periods of negative real rates. Why? Because when saving cash guarantees a loss, people look for alternatives. They look for assets that preserve purchasing power. Gold has done that for thousands of years. Not stocks, not bonds, not fiat currency. Gold. Trust, or the lack of it. At its core, gold is about trust, or more accurately, distrust. People don't buy gold because they love shiny metal. They buy gold because they don't trust the system. They don't trust governments to stop spending. They don't trust central banks to stop printing. They don't trust fiat currencies to hold value long term. And that distrust is growing. Governments everywhere are drowning in debt. Public debt, private debt, corporate debt. The solution is always the same. Print more money, lower interest rates, kick the can down the road. And every time they do that, the purchasing power of currency erodes further. Gold doesn't require trust. It doesn't need a promise. It doesn't need a government. It just exists. Central banks are buying gold. Here's something most people don't realize. For decades, central banks were sellers of gold. They didn't want it. They believed in the dollar system. That changed after 2008. Since the global financial crisis, central banks have become net buyers of gold every single year. Why would central banks buy gold? Because they understand the system better than anyone else. They know fiat currency is fragile. They know sanctions can freeze reserves. They know political risk is rising. When the United States and its allies froze hundreds of billions of dollars of foreign reserves, a message was sent to the world. Your reserves are not safe. If you hold dollars, they can be frozen. If you hold bonds, they can be sanctioned. If you hold gold, no one can freeze it. That's why countries around the world are quietly moving away from dollars and towards gold. Gold versus real estate versus stocks. Now, let's clear something up. Gold is not the only asset that protects purchasing power. Stocks can do it, real estate can do it, businesses can do it. But all of those come with complexity and risk. Real estate requires management, tenants, maintenance, regulations, taxes. Stocks require timing, volatility tolerance, and constant monitoring. Gold requires none of that. You buy it, you hold it, you do nothing. That simplicity is powerful, especially during uncertain times. Gold is not just an inflation hedge. Many people think gold only rises with inflation. That's wrong. Gold also rises with financial stress, geopolitical risk, and currency instability. In fact, some of gold's biggest bull runs happened when inflation wasn't extreme, but trust was collapsing. Gold doesn't just hedge inflation, it hedges systemic risk. That's why gold can rise faster than CPI numbers. Historical gold cycles. Historically, gold moves in cycles, bull markets, consolidations, corrections. In past cycles, gold has risen 7 times, 8 times, even more from bottom to peak. From the early 2000s to 2011, gold rose over 600%. Was that abnormal? No. It was a response to debt, money printing, and financial instability. And today, those forces are even stronger. Debt levels are higher, money printing is larger, geopolitical risk is greater. This isn't a normal cycle, it's a super cycle. Debt changes everything. Here's the key difference today. Debt. In past cycles, central banks could raise interest rates aggressively to fight inflation. They can't do that anymore. Why? Because the system would collapse. Governments can't afford higher rates. Corporations can't afford higher rates. Households can't afford higher rates. So inflation becomes the solution, and inflation is rocket fuel for gold. Is it too late? So the big question, is gold too late to buy? If you think gold is going back to $1,000, yes, it's too late. But if you understand that fiat currencies always lose value, then no, it's not. Gold isn't about timing the top, it's about preserving wealth over time. In a world of rising debt, endless money printing, and declining trust, gold remains one of the few anchors of stability. The fiat currency system is a 50-year experiment, and it's failing. Not overnight, not all at once, but slowly. The failure is not an event, it's a process. Transactions will still happen in dollars, but savings will increasingly move into real assets, gold, silver, hard assets. And if you're a long-term investor, no, it is not too late. Gold doesn't promise riches, it promises preservation. And in times like these, that promise is priceless.